Welcome back to Trading 360. I'm Nicole Petalides. Happy Friday to you. Tough week, right? But we have some trading for you. The big three stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts, and here to take us through the trades, Scott Bauer, CEO of Prosper Trading Academy. Thank you both for being with me. Scott, I know you're taking a look at one of these financials, right? Of course, financials have been in favor of late due to the rising rates, but this really has been an outperformer, and you're waiting on earnings too. Tell me a little about PNC.
Yeah, I really love PNC, Nicole, and Happy New Year to you. This financial firm has been a fantastic performer. Really, it has outperformed its peers in as you just said, a fairly hot sector recently, and I believe it's poised to make a big breakout. I would look for a quick play on the break of the 220.5-ish level up to about 234 or so. And if there's a pullback at all, 210 is a major entry area. That 234, that there's some resistance there, but down around 210 or so, which is about 5%, 6% lower from here. There's a gap fill, 50-day single moving average. So there's a lot of support right below this stock right here. Earnings are on the 18th. I absolutely want to be long this thing into the print. If you look at the charts, if you look at the technicals, this has been making higher highs, higher lows, right at about 222 or so right now. And again, from the options standpoint, there's a lot of ways to play this going into the earnings print. I really like buying some diagonal call spreads. That's a strategy that allows me to buy some time. It allows me to sell a call option with a higher strike, buy a call option with a lower strike, looking for a move to the upside. And I just really think that there's a lot of support below the market here, and this thing is really poised to break out.
All right. Well, boy, what a testament to PNC Financial.
Yes.
Right? There was a lot of love right there. Ben Lichtenstein, your thoughts as you take a look at this chart. And as Scott noted, earnings coming up as well.
Good morning, guys. Well, I can see why Scott has that sentiment, and it looks like he's not alone in terms of that optimism. We've got rates on the rise. Again, PNC, a reflection of that. And Scott, higher highs and higher lows seems to be the trend at this point. We'll see if that can continue again into earnings will be key for PNC. But let's first begin with the 5-minute time frame and why. Again, I think price is a reflection of that sentiment that Scott just expressed. The move up we saw this week from 200 to 223. You've got a well-defined trend up, and again, rates are going to be supportive of this environment. Here's a look again at the more granular 5-minute time frame in just the week that was. A nice move up, to say the least, and they're enjoying gains here today, up by about 0.8%. We always talk about these consolidation areas on the upper extreme after a big move like this, being very bullish and supportive of the trend. We're looking for a breakout to the upside to continue this move higher. To point out this move up that we just looked at from what was it, 200 up to the 223 level. That wasn't just this week that we ran up. It was last week. Well, the last few weeks you can see the move higher from, in this case, we're talking 189. And this was key for the bulls. And I'll show you why in just a second, why 189 is big. Scott has his eye on 210 and then 234 to the upside. But let me show you why on the daily time frame. What I'm talking about is because, again, we always talk about this 2 phases of development, right? These auction market theories, these principles, idea being the market's in either a vertical phase or a horizontal. Vertical, horizontal, sometimes more well-defined than other. But as we establish a staircase pattern to the upside, we don't really want to retrace the last footprint or the last staircase that we were on. In this case, again, as we pulled back into that 189 area, this pullback on the 20th of December, I think it was. Notice how we never really got through the middle of this range that had been established throughout the summer. So that, again, very supportive. And if you can't go lower, again, in a trend environment to the upside, you're going to get some movement higher. We certainly did. Lastly, take a look at the weekly time frame here, guys. And again, just sort of speaks to the bullish sentiment that Scott's kind of feeding into here, or a reflection of. You can see the huge move higher the last, 3 weeks higher. It looks like we're going to close higher this week. But notice how the last 3 weeks retraced 7 weeks of downside momentum here. So really down only one of those 7. But here you can see it, or up up only one of those 7 weeks on the way down. But here you can see the conviction to the upside as of recent, tied to rates to the upside. It'll be key to watch next week to see if we can get some follow through. The bulls want to see not only follow through here in the form of higher highs and higher lows, but then some new consolidation to form. That's the acceptance of a new upper level, but trending higher and trying to break out right now in the weekly time frame.
Yeah, that's what I was thinking about, higher highs and higher lows, because you don't want to have that retracement where those lows go back to the prior footprints that you were referring to, Ben, and I think that's an important point. And I know we have another name in the financial realm, Scott, that you're going to be taking a look at. But as you take a look at that chart in particular, and it makes sense as you start to see some optimism, particularly around the talk of higher rates, and now 4 rate hikes a possibility.
Yeah, absolutely. And, as Ben said, this has been just a really trend environment here. So, you look at all of the technicals, you look at the macro fundamental analysis here with what you just talked about with 3 or possibly 4 rate hikes here. And that all sets up to me as just continued positivity for PNC and a few other stocks in the same space as well.
Yeah. Well, that's a good, you pitch 'em, I hit 'em, Scott Bauer. Okay, I'll bite. And that is right there, a good pitch for your next name and play, and that is Discover Financial Services. Tell us a little bit about that one.
Sure, absolutely. There's a lot of news, a lot of media on Visa, on MasterCard, some of the other credit card companies, and Discover, DFS to me, doesn't really get the kind of attention that it should. And I love most of the credit card firms in this environment, even Visa today. And Visa, had a downgrade this morning. It's bounced back off its lows. I love that one too. But Discover here, it has found a ton of resistance at that 200-day single moving average on the daily chart, and it is above that now. So I would look for a rebound play at around 119 or so, or a dip buy, and it's trading above that right now. But I love a breakout now because it's above that 200-day single moving average here. I think we can get up to the 130 to 133 area here. There is some resistance up there. But I think that the environment, the macro environment for this stock is really set to break out another, potentially 5% or so to the upside. Just like PNC, they have earnings a day later on the 19th, so a couple weeks away from here. This is another one, Nicole, that I really want to be long from an option standpoint, from an option strategy, into the print, into the earnings print here. And I think there's ways to do that again, whether it's just being long, some call spreads, calendar spreads, diagonal spreads, but it's another one I think really is poised for a good breakout to the upside.
Yeah, so another $5 plus to the upside, and watching that 200-day so closely. It's imperative, clearly. So tell us, Ben, your thoughts as you take a look at this.
Almost an identical pattern. I can see why Scott has a similar sentiment towards DFS as we were just talking with PNC. Again, bullish type move this week, tied to rates to the upside. As Scott mentioned, some of the downgrades from some of the other names in this space, and the bullish sentiment we're seeing here today, even really more supportive and kind of providing, again, a little bit more attention towards the enthusiasm that we've seen as investors shrug off some of the uncertainties and concerns. But take a look at the bid activity, the trend environment. This is the 5-minute time frame, and again, just bottom left corner, top right. In this case, we're talking from 115 up to 126 as we just kind of take a step back from the 5 minutes, as we always do, and look at the 60-minute time frame. It's not just from this 115 level that we were talking about, again, up to 126. You can see back in the end of or beginning of December, we were all the way down at 106 in the nice run-up that's been coming into play. So they've added, we're talking again, a nice $20 in terms of price activity to the upside here. So continuous pattern to the upside. And just as we take a step back, and it's similar as I look at this, I notice again it's almost identical to the S&Ps. For example, the mini contract, the low that we posted in the beginning of December, and then we kind of pulled back in the middle of December, but we're unable to take out those lows from earlier in the month. So this is almost an identical pattern if you looked at the ES on the 60-minute time frame. But also taking a step back, you can see the daily shows. Well, here's first of all that 200-day moving average that Scott talked about, and again, that, well, if you're trading this one, a good opportunity to get in on the long side, and I hate to say kind of 2020 or hindsight, but we always talk about these areas of consolidation, and not only in terms of what we were just talking about, Nicole, as far as the footprint that it leaves on the way up and determining if trend is still intact in terms of the pullbacks and significance or areas that they pull back to. And in this case, we want to see it holding up above 95 here, the middle of this last footprint. But these are three key areas associated with each one of these areas of balance: the upper extreme, the lower, and the middle. Again, we reference the middle most often in the prior area, but here it pulled back to this lower extreme. So some traders look for that dip, that pullback. If it holds the key support and then works its way back into the range, then they like to get long. And in this instance, it would have been right back above that 200-day moving average. So you can see how it pulled back below it, but it was short-lived. And again, in a trend environment, you'd expect for those pullbacks to be short-lived. The bulls want to see energy build right now up and through 128, 130. That would open up the door for a retest of the 135 level, potential for a breakout and resumption of this trend to the upside that we've seen off these pandemic lows, again, all the way down at the $23 level up to 135.
All right. So, all right, we'll leave it right there because I want to leave enough time for Netflix. Because I must be living under a rock and didn't even realize they set a record this week with Leonardo DiCaprio and Jennifer Lawrence, and this now new show, Don't Look Up, officially a record breaker, viewing hours for a movie in a single week, which now could be really taking out Bird Box and other names. So Netflix still very hot. You're watching it, Scott, as it's approaching now the January 20th earnings. You said you don't want to have a position in the earnings day or period. So how are you going to position yourself on Netflix?
Right. I don't, Nicole, because Netflix historically, this stock has moved based on subscriber growth. 2 quarters ago, the subscriber growth was awful. Last quarter, it improved dramatically. Who knows what it's going to be for this coming one? You know, the stock has been so tied to the pandemic, which, you know, personally, I don't know that there should be that correlation, but it certainly has been. But right now, and Ben has talked about this consolidation, both in the other stocks that we talked about. Right now, after this big fall in Netflix, to me, it looks like it's starting to coil a bit. It looks like it's starting to consolidate, meaning that this big fall that we've seen recently is starting to just ease a little bit. So one of the things that I'm noticing in Netflix, unlike many of these other FANG or tech stocks that have really gotten hit over the last couple of weeks, is the option volatility, the implied volatility is enormous in Netflix right now. And I'm talking about volatility ahead of the earning print. If you look on the Thinkorswim charts, it actually has the implied volatility at about the 80 or 85th percentile, which is really expensive. So to me, I see the stock kind of leveling off here. I want to sell some put spreads. I'm selling some put spreads down below here. But again, with an expiration of next week, before earnings, I do not want to have a position going into earnings. I think you can take advantage of this right now by collecting a lot of premium, looking for the stock to stabilize a little bit before that earnings print.
Yeah, understood. Ben, what do you think of that, right? Having this put spread and trying to get it done prior to the earnings print because the implied volatility is so dramatic. Ben?
Well, I'm looking at the chart here, Nicole, and before we come into my screen, I just want to point out a couple things. Weakness that we've seen. Scott mentioned that, the selling in Netflix. Here it is on the 5-minute time frame, and you can see polar opposites in terms of some of the names we were just talking about, PNC and Discover to the upside. But here you can see from 615 down to 540 in this instance. And Scott, I got to push back on this one. I don't really see the bottoming pattern happening as of this point on Netflix. It could be, okay, we're starting to lift a little bit here on the 5-minute. I see that now coming off the lows some, but still down 1 3/4. And take a look here on the hourly from 701. We're talking about all the way back to the middle of November, all the way down to this 540 level again that we just now might be coming off of, as Scott pointed out. Okay, I'll give him that. And on the more granular, it's slowly starting to bottom here a little bit, it looks like. But on the hourly, we just recently took out lows from earlier this week. So I want to see a little dust settle. I always like to say I want to see some of these areas, these footprints that we establish on the way down, get taken out on the way up before I start to get enthusiastic about this one. So again, I'm not quite on board with Scott on this one, but I do see weakness here on the daily. I wanted to point out that we're right back to levels we hadn't seen since we're talking end of August of last year. And then just quickly take a look here at the weekly time frame. Remember, we were talking about the significance of these areas of consolidation, the key areas to watch associated with them, the lower extreme, the upper extreme. We pulled out of this one and then kind of formed one for about 4 or 5 weeks around that 675 area. Now we're pulling back. This is significant. The key area to watch here next week, that 525, 520 area to watch. I think, Scott, you're right. It's going to be important to hold that level for the bulls. That's going to be the area where, again, if they're still in charge, Nicole, Scott, you expect them to step up at some point soon. We're retesting, again, that big, that central area that was associated with the range that was established throughout last spring, summer, into the fall of, or I'm sorry, into the spring, summer, and fall of 2020, all the way throughout 2021 prior to that run-up that we saw in July, August of last year.
So Ben,
yeah, understood, Ben. Ben has some hesitation there, Scott. You have a final quick thought?
I do, and Ben, you just pointed out that 515, 520 area, big congestion. If you can add in some of the volume studies on the TOS charts there, you're going to see that that is massive volume there. To me, that's like a magnet. That's the area where I'm selling these put spreads ahead of the print. So down around the 525, 520 area, that's where I think it consolidates. It stopped before earnings. So that's what I'm looking at.
Okay.
All right. Well, I guess we could all agree that we can find some Netflix show we like. I'm sure we could all agree on something on Netflix, though I don't even have it. But anyhow, it is great to see you both. Thank you very, very much. Scott, thank you. Scott Bauer, CEO of Prosper Trading Academy. Ben Lichtenstein on the TD Ameritrade Network every single day. Thank you both. Good to see you.